Welcome to The Explainer. You know, when a bank as huge as JPMorgan Chase talks, everybody listens. It's like getting a checkup on the entire economy. So today, we're going to cut through the noise and go straight to the source, breaking down their Q3 2025 results using what their own CFO had to say.
Okay, let's just start with the headline number, because wow, a whopping $14.4 billion in net income. Just let that sink in for a second. That's the profit they pulled in over just 3 months. That number alone tells you a huge story about how they're doing and, the business climate right now.
And right out of the gate, the CFO, Jeremy Barnum, he basically said, look, we're not going to do a long, boring presentation. His message was really simple. The results are so good, they pretty much speak for themselves. Let's just get to the point.
All right, so here's the game plan. We're going to break down this monster quarter, then take a look at how the average person is doing. After that, we'll see what's happening on Wall Street, try to wrap our heads around their wealth management business, and finally, peek at what they think is coming next.
So first up, let's get that 30,000-foot view, the overall report card for the bank and what was really powering these incredible results.
The main story here is really just solid, impressive growth. We're talking revenue up 9% from this time last year. And this wasn't some kind of fluke, it really came from two big things: making more money in the markets and bringing in higher fees across the board.
Now, what's so interesting here is that the growth wasn't lopsided at all. I mean, look at this. It's like every part of the engine was firing on all cylinders. Their trading desks, the wealth management teams, the deal makers, even their payment systems. It was a win everywhere you looked.
And this number, this just drives home the incredible scale we're dealing with. A total revenue of $47.1 billion. That is the total amount of cash that came through the door in just 90 days. It's kind of mind-blowing.
Okay, so that's the big corporate picture. Now, let's zoom in on the part of the bank that actually deals with most of us, the consumer side. This really gives us a fantastic window into the financial health of everyday Americans.
So this is the big question, right? With everything we hear about the economy, what does JP Morgan's data, which covers millions and millions of people, actually tell us about how the average person is doing?
Well, the answer, according to them, is surprisingly positive. People are hanging in there. They're paying their bills, their credit is stable. For the 5th year running, more people trust JPM with their deposits than any other bank. And get this, their popular Sapphire credit card had its best year ever for signups.
But it's not all sunshine and rainbows, and this is where it gets interesting. While the data today looks great, the CFO made a point to say they are keeping a very close eye on the future, especially any little sign that the job market might be starting to weaken.
All right, let's switch gears from Main Street and head over to Wall Street, because the part of the bank that deals with huge corporations and the financial markets, well, they had an absolutely fantastic quarter.
I mean, this chart says it all. Just look at the revenue from trading stocks. It's surged by 1/3 compared to last year. That's a massive jump, and it tells you their clients were busy and the market was absolutely buzzing with activity.
And it wasn't just trading either. The CFO pointed to more companies going public, IPOs, and a big comeback in major corporate deals. And maybe most important, he said their clients are feeling optimistic. That's really the fuel that makes this whole engine run.
So what does all that optimism and activity add up to? Well, check this out. A 16% jump in the fees they collect for investment banking. That is a super strong signal that companies are feeling confident enough to spend big on expanding their businesses.
Okay, now let's talk about the division that manages money for some of the wealthiest people and biggest institutions on the planet. And the numbers here are, well, they're just on another level.
Seriously, just take a second and try to wrap your head around this number. They are managing $4.6 trillion for their clients. The sheer scale of that is almost impossible to imagine.
And that almost unbelievable number, it's still growing. This quarter alone, clients put an additional $72 billion of new money into their hands for them to manage. That's after you account for any money that was taken out. Just incredible.
So what happens when you combine all that new money pouring in with markets that are generally going up? You get a record-breaking quarter. Revenue for this division hit an all-time high of $6.1 billion. All right, so after a quarter like that, the big question is, what's next? So let's look at the bank's own crystal ball straight from the CFO's desk.
And here it is. This is the roadmap they laid out for investors. They're giving pretty specific targets for their income and expenses, but they also dropped a really interesting little hint about their spending plans for the future. And hey, just a quick refresher for anybody wondering, net interest income, or NII, is just the bank's bread and butter. It's basically the profit they make from their core business of lending money. Simple as that.
Okay, so here's that little warning shot I mentioned. The CFO told all the Wall Street analysts that their predictions for the bank's spending in 2026 seemed a little bit low. In other words, he's signaling, hey guys, expect us to keep investing heavily because growth and inflation aren't cheap.
And that leaves us with the big final question, doesn't it? The results today are fantastic. They show a strong consumer and a booming Wall Street. But that cautious tone about the future makes you wonder, are we looking at the peak right before a slowdown? Or is this the kind of strength that can actually guide the economy to a soft landing?